Welcome back to Trade 360. I'm Diane King Hall. Time now for the big 3 stocks, 3 charts, and 3 trades. Kevin Green will take us through the charts. And here to take us through the trades is Don Kaufman, co-founder of Trade. It is great to be with both of you. All right, Don, let's get right into your takes today. You've got Bank of America on your list. It's been outperforming the S&P 500 year to date. 4% of that move came within the past month, roughly. Tell us how you take this one now.
Yeah, let's get contentious right off the bat over here. Why is it outperforming the S&P 500? Because right now, you know what you're seeing rotations from tech specifically into any other place. Well, one of those other places, if you will, happens to be none other than some of the financials. Bank of America's got a huge bid under it. I mean, this thing's trading 45 a few days ago, rockets up to 50. Look, I'm not, overly bearish here, but I am looking for a pullback in the near term. I think it's definitely an overcooked kind of turkey. Again, 10, 12% move. I mean, straight up right now. It broke through the highs also all the way back to 2022. So, maybe this squeeze is done. A pullback. So what I'm going to do is I'm going to go out to the September 26th options expiration inside of Bank of America. I'm just going to buy a 51 put and sell a 49 put, just a $2 wide put spread done for a 90-cent debit, kind of what we term an in-out spread. Nice defined risk package trade. Just kind of looking for a little bit of a pullback here in the near term. Again, it's all about rotations right now, and sometimes we're rotating into sectors we don't necessarily really want to buy them. There's nowhere else to go, right? It's tech. If you're not tech, where are you going? Financials.
Kevin, take us through what you notice about this chart. I mean, Don says no one likes an overcooked turkey.
Yeah, Bank of America, it's very simple when it comes to the technicals. You see a consolidation, usually a double top pattern, and then we have a consolidation breakout of that double top, and then we tend to see a run between around 5.5% to around 8% here, and that's exactly what we are seeing. And this time last year, we see this actually the same type of technical setup that has taken place. This time last year in white, we were hitting that $40.80 area. We were able to fail it, came back, retested it, failed, retested that 20-day moving average, and then we had a breakout of 6% until we actually had a little bit of a pullback going back to that 20-day moving average. We also had another double top that did fail. Back in December, we hit this $48 level. We came back, retested it, and we had the failure. We also had the tariff news, things of that nature. It's been a nice uptrend. And I have it circled here. Back in May, once again, the area was $45. We hit it twice, came back, consolidated, broke out higher. That was around an 8% move. We just had the same type of technical setup coming back, hitting this $48, $49-ish area, testing it twice, consolidating, breaking out. If you're looking for another 6 to 8% breakout from this $48 level, you're looking at around $51.50. So if you're just going off the chart patterns alone, Don could be right here. We could be near the end of this rally and where a pullback could occur here, but it probably would need to be a little bit of a scalp. It probably wouldn't be an overall reversal just given the trend, but anything can change. MACD in a bullish formation, RSI also in a bullish formation, breaking that downtrend of making lower highs as well as lower lows. It's a decent breakout right now. Just how far can it go? Anybody's guess, but right now, if you're going from the trend, you're saying another $1 from here or so, $1.50 from here or so to the upside before another area of resistance.
All right. Thank you, KG. Don, let's move on to the next trade you've got on your list. I wore silver, I think, in anticipation of this. You've been on the silver train for a little while. Silver ETF, what's your move on this one?
You know what? So I'm a little surprised right now in some of the complacency in not just overall markets, but really specifically in some of the metals. What do we have going on? The 50% tariffs right now in India. Didn't do anything to the S&P 500. It's not doing anything to metals. Miles move inside of the US dollar. Again, a little surprising. The markets are kind of asleep on that. Then obviously we're calling into question like Fed kind of autonomy altogether. The metals also look, beyond that. Look, I'm bullish in here right now because the risk factors are just simply stacking up. And I see a nice consolidation pattern in and around this 34, 35 level, and Kevin's going to show you that in just a moment. So here is a nice bullish trade inside of silver, specifically SLV. I'm also going out to the SEP 26th expiration. I'm going to buy the 35 calls. I'm going to sell the 38 calls. So it's a nice $3 wide call spread. This one's done for a 75-cent debit, looking for the break to the upside in the next couple of weeks.
Okay, Kevin, what do you notice about this chart?
Yeah, silver has been trading a little bit differently over the last 3 to 4 months. There has been a lot of enthusiasm when you're looking at SLV or if you're looking at silver futures. And the reason why I say that, the technicals on silver actually usually hold up pretty well. If we look at a 1-year chart, usually it does trade in like this ascending channel type of pattern here. And then you have these fundamental crosses, or these RSI divergences, and then the MACD cross, which also then kind of leads to a breakdown in the channel, a consolidation, and then once again kind of repeating the overall trend. And now we're actually seeing a little bit of a different situation here. Back in May, we had this consolidation between $29 and let's say $30.50, and we started seeing this breakout, breaking above that 31.50-ish area, and then hitting those highs of $35.91. Now we have pulled back. We are starting a new channel or a trend for right now here, and if we're able to break out once again, 38 to $40 could be in the cards here, especially given the environment that we are in. But trading is actually relatively thin at these levels. We are seeing an area of resistance. RSI is also in a bearish divergence where it is making lower highs at this point, as SLV is actually making higher highs. So be mindful of that. MACD looks like it wants to be in a bullish formation here. Cautiously optimistic for this name, but it has deviated from its usual trend of trading purely on technicals over the last couple of years to now trading on more fundamentals here. So decent little setup here. You can make the case for the upside move. Any fundamental breakdown, you're looking at 31.50 as your first area of major support.
Okay, that's SLV. Don, let's talk about your final trade. You've got eBay on your list today. That's been a big outperformer year to date, up more than 50%. But is it time for the bears to come clawing?
Yeah, that's exactly what I see right now. Sellers, oh, they have arrived. They have arrived. So we hit the 100 level inside of eBay, and it's been a fairly wicked reversal thereafter. It's interesting though, because we ripped up to the 100 level, consolidated there for a couple of days, and just a wild breakdown in eBay in the last 24 hours of trade. So I'm going to hop on the bear train in here, and again, I think that this is a considerable technical breakdown. Even if we consolidate at this point in the pullback, that there's still significantly more downside available. As such, I'm going to look for it. I'm going to take advantage of it. I'm going to go out all the way to the October 17th expiration. So why the duration? Give myself some time for this trade to actually play out. The initial break has already happened in eBay, which Kevin is going to show you here momentarily. There, again, could be some consolidation, maybe a secondary break. So I'm going to go out to the Oct 17 expiration. I'm going to be buying the 90 puts, selling the 85 puts. So it's a $5 wide put spread. I need to be under 85 by the Oct 17th expiration, but it's relatively, upfront. The costs are not extreme. It's 97 cents. So you're risking basically $1 to make about 4 in this particular put spread.
Okay, so KG, what do you notice about this chart, especially, given that Don's approach is seeing what looks like a potential breakdown here?
Yeah, so when you're looking at eBay over the longer term time frame, or the 1-year chart here, we had a consolidation for 10 months, and then you did see a breakout, and you had some bulls really trying to step in, leveraging the 20-day moving average as an area of support. One thing I also want to highlight here before we kind of get to the topping pattern, between June and let's say the end of July, if you actually make a trend line here, that could be a key area of support. But you can look at this volume profile, and I think this is also lending credence to Don's thesis here. That volume profile has been pretty much very thin since this gap to the upside here, pretty much the gap from $78 back in early August here. So not a lot of buyers actually stepping in, but we did see the price action going higher here. But then we have a bull flag pattern. We are in a bullish trend. We had a flag that took place here, a consolidation, and Don's keeping his eye on the breakdown of that flag and the breakdown of the 20-day moving average. There's two key bearish indicators. Your RSI is also in a bearish indication as well. It was in overbought territory. Now it's aggressively going into a retracement of that type of trend. And then the MACD is in a bearish cross. The 12 EMA is below the 26 EMA here. First area of support, $88. Breaking below that, you're looking at, once again, around that $80 to $81-ish level here. A really nice run, but you could tell that the volume was not able to really kind of back this up, and the bearish tilt to this market or this particular stock is justified just based on the technical breakdown and the technical structure that we see here.
Okay, so this is about technical structure here. Don, any final thought you want to leave us with on that one?
Yeah, not so much in eBay, but the overall marketplace. Look, we all know it's the world according to Nvidia in the foreseeable hours here. So the marketplace has become a just a binary volatility fest, if you will, for the next few hours of trade. Everybody is going to rest hopes, dreams on Nvidia earnings, and again, I think the implications are initially it's going to be higher, but the expectations are outrageous. May trade lower off this.
Okay, that's a fair point there. That's Don Kaufman of Theo Trade and our very own Kevin Green. Thank you, guys.